All right, hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and in this video, I want to walk you through the very best markets to utilize with the Reversal Wave Trader program. So far this week, we have highlighted the versatility in the RWT program. We've shown you how to take very short-term trades utilizing our new active trader mode, where we're looking for very short-term swings back and forth with long calls, long puts. In yesterday's video, we showed you more of a traditional swing trade where we utilized a credit spread looking for a typical holding time of 3 to 20 days. That gives you the flexibility that you need to react to different types of market conditions. Bottom line is long term, we don't know whether the market's going to move higher or lower, but what we do know is we're going to have stretches of bullish and bearish environments. We're going to have volatile trading. We're going to have slow trading. It just depends on where we're at in the cycle. Having that flexibility and being able to diversify is going to make all the difference in the world in the months to come and also in the years to come. You want to be prepared for anything the market throws your way. The million-dollar question becomes, we've got this full system, right? Gives you the indicators, telling you where to get in, where to get out. But now the question becomes, what markets do you look at? I think the last thing any of us want to do is just sit there and stare at charts all day long from opening to closing bell, trying to research, trying to predict where the next big move is going to come from. What I would rather do is focus on a small list of tried and true names that we know historically have moved back and forth really well. They have good liquidity in the options. That makes a huge difference. And I'm going to show you how we identify the best markets on a daily and a weekly basis. Before I get to that, I just want to update you on the ROKU trade that we reviewed in yesterday's video and also talk about some key levels to watch in this overall market here for the next couple of days. Looking at this daily chart of SPY, this is the S&P 500 ETF, and we've been talking with our members quite a bit over the past few weeks about the need for a pullback. We've been sitting up near highs. A lot of stocks are very extended, and the market's done a heck of a job just ignoring any type of bad news. Good news, bad news, doesn't matter. The market has ignored it and has just continued to move higher. As a result, there's been very little fear priced into this market. The level of complacency is at or near all-time highs. We're in need of that pullback just to reset things. And over the past day and a half, we have finally started to see some selling. Nothing extreme. Haven't seen any type of panic move. It's been healthy selling so far. But the last couple of days, we've seen some very key levels come into play. Notice how yesterday we broke through our magenta colored line. That's the 8-period exponential moving average. We also, yesterday afternoon and also into today, we started to break through the 20-period SMA and EMA. Those are the green lines on my chart. And if those levels continue to break down, it opens things up all the way down to the 50-period EMA and SMA. And those levels are down at 440.28 and 439.01. On the downside, we have to watch those levels closely because those levels so far this year have held almost every time we've tried to move lower. This afternoon, after the close, we've got Apple and Amazon earnings that are going to come out. Tomorrow morning, we have the big monthly jobs report out pre-market. There's a lot of catalysts to keep this market moving this week. And not only do Apple and Amazon have the potential to move the tech sector and the NASDAQ names, they are so intertwined in the entire market. They're a big part of the index products. Yes, they are tech stocks, but they also give you a glimpse into the strength of the consumer. That can impact many of the retail names. There's just so many areas of this market that are going to be impacted by those releases. That has the potential to bring these support levels into play very quickly on any type of a sell-off. On the upside, all those levels that we just broke down through, those moving averages between, well, if we take a look here, between 450 and 453, those become areas of resistance. And then last week's high at 459.44, that's an area to watch on the upside should we move back higher. Apple has saved the day so many times so far this year. We'll see if they can do it yet again after the close. The selling it's helped, right? Because we have seen volume uptick a bit. We approached 100 million shares yesterday. We're at 43 million shares with just over an hour to go in the session today. That uptick in volume definitely makes life easier when trying to get fills quickly and at good pricing. We'll see if that is the new trend here in the weeks to come. If we can start to see volume move higher, that'd be great. The ATR is still below 4. The average true range, I'd still like to see that moving back above 4 here in the near future. We'll see if that comes into play. And then the VIX. If we take a look at volatility, it's back above 16. It actually briefly approached 17.5 this morning when markets were on the lows. That's also a great thing to see. Even though financial media wants you to think that volatility is bad, for us, it's a great thing. It opens the door to a wider range of strategies. It gives us much better conditions on the option side. So we would love to see that volatility continue to move higher. Now, let's take a look at the Roku trade from yesterday. In yesterday's video, we came in and we talked about selling the 95-97 call spread. This is out in the August monthly cycle. We had 15 days left to expiration. And we took a look at selling that 95 call, buying the 97 call at the same time. And we put the trade on for 65 cents. It's now trading for 49 cents. The stock is down $2 today, which is great. Nothing significant, but it is moving to the downside, which is what we're looking for. We want the stock to stay below 95. It's now trading at 89. We now have close to a $6 cushion where the stock could continue to move back higher, and we're okay. We make money if the stock moves up, down, or sideways. Does not matter. As long as price stays below our short strike, we're okay. We also have the benefit of time decay helping us. Every day that passes, that helps us, as well as any type of volatility contraction. 5 different routes to follow to make money on the trade. Now, if I take a look over at the chart, pull this up here. The reason for the trade is we had Roku. It's one of my favorite setups. We had Roku make a pretty impressive move higher after earnings. You can see the earnings icons down at the bottom of my chart. Those red and blue icons, you can see the stock shot higher. We went from down around 68 all the way up to 98. That was a $30 move in a matter of a couple of days. We got overbought. The way that we quantify that, we had yellow bars on our pulse indicator, indicating that price was past a 1 standard deviation move. Doesn't mean price can't move higher, just means it's not statistically probable. Odds favor either a period of consolidation or a reversal. Only 13.6% of all occurrences fall outside of this range on the upside. Again, doesn't mean it's not possible, but putting the numbers in our favor, we know that the odds favor either a pause or a pullback. And you can see, lo and behold, what happened after that yellow started to pop up on our pulse. We didn't immediately roll over. We started to chop here for a day or two. And then yesterday into today, we have definitely started to see some follow through on the downside. Now, with this one being more of a traditional swing trade, we're using our 130-minute chart here. We either need further follow through on the downside, or I need a longer duration trade just to let time decay add up in our favor. Getting filled at 65 cents like we did yesterday, that's our max profit potential. We like to close it out when we have 50% of the max profit booked. That means I'm trying to buy this spread back for around 32 cents. Anytime over the next 15 days, if this spread trades for 32 cents, I'm looking to close it out. So right now we've got about a 15-cent profit. We're up around $15 per spread, doing exactly what we need it to do. But this is not designed to be one of those active trader setups like we talked about earlier in the week. This is designed to be a swing trade. I'm looking for more follow through. This one is not going to take a ton of time to manage. I've literally looked at this trade once all day. I can see that it's moving in my favor, but we haven't hit any target levels, haven't hit a stop yet, so there's no reason for me to sit there and stare at the chart. Let the trade do its thing, move on with my day, and get to other things. All right, so Roku, if you're sitting on that position or if you're just tracking, nothing to do there. We're just going to continue to hold as is. Again, that Google trade that we talked about in the video early in the week, that one was closed out, as we talked about yesterday, for over a 200% return with the long puts. So we're starting to see a lot of flexibility here, right? A very short-term trade with a weekly option with the long put. Great, that one worked. The credit spread, more of a traditional swing trade, very different strategy, using a monthly option. That diversification is going to make all the difference in the world going forward. It's going to give us more consistency in our equity curve. All right, so now that leaves us into today's topic of what are the best markets to look at? Could we take the indicators? If I go back over to the chart, as you can see, we have the ability to identify exact entry and exits. Why not just come in, run a scan to take a look at potential setups on a wide range of markets, okay, across different sectors, index products? You could. The problem with that approach is with many of those scans, you are going to be left looking at markets that you're not familiar with. The chart patterns might look great, but how liquid are the options? Is it easy to get fills on your trades? What are the typical levels of volatility? All that is very valuable information for us. It allows me to trade with a higher level of confidence when I know what an average holding time is. I know how liquid the options are. I know the key statistics on all the markets that I trade. What we want to do with our trading is we want to go to where the action's at. In many cases, it's the NASDAQ related tech stocks, it's the index products, it's the financial names. So many people like to get caught up in the hot stock that's in the news. It could be a meme stock. It could be an AI stock like we've seen here recently. All of a sudden, people start talking about the same name, and you feel like, hey, if I'm not trading that name, I'm missing out on the opportunity of a lifetime. For me, I don't like to chase those recent hot names. I want to focus on a tried and true list of products and names that I know move really well. So Google, okay, you can see really nice trade to the downside. I know it's very, very active long term. Apple, right? We did the system earlier in the week, really nice trade to the downside, really nice winner. Okay, we know that these markets are very active. Amazon, okay, you can see how active Amazon has been. Okay, we had a trade on the upside. We did have a loser on the downside there, but very, very active market, very active options. I'm going to trade Amazon on a very regular basis. Tesla, okay, moved to the downside. Nice winner, starting to recover here. We've actually had a couple of winners on the downside. So these are names that we know are very active. You don't typically load up these charts and see a lot of chop. They're moving on a very regular basis. And if I go over to the options, let's load up Tesla. Here's the monthly options. Look at the liquidity. Look at the volume and open interest in the options. We're talking about thousands of contracts spread across many different strikes. If I load up the weekly options, same story. You have thousands of contracts. It's not just one strike price that's active, right? It's not just the call or the put side that's active. It's on both sides. What I'm looking at when I talk about good liquidity is I want to trade names that have good volume and open interest spread across multiple strikes like you're seeing here on Tesla. Apple, same story. I mean, there's just massive activity across the board. And this is on a daily basis. This isn't just unique to today's session. This is on a regular basis. And that added liquidity is going to make it easier for me to get fills very quickly on these markets. The more liquidity you see, look at these markets. Apple, look at the difference between these bid-ask prices. There's about a 5-cent difference between the bid-ask. Those are pretty tight markets. If I go over to SPY, this is the S&P 500 ETF again. Look at these bid-ask prices. The higher the liquidity, the tighter the markets. If I see a bid-ask differential here of a penny or two, I know that when I place my order, very good chance that I'm going to get filled very quickly and at good pricing. If you're trading markets that have great looking chart patterns but not liquid options, you're going to be fighting an uphill battle where, hey, you might see an entry point hit or a target hit, but if you can't get filled on that order, it does you no good. I see that so often where people get into trades on stocks that they might hear in financial media, it might pop up off a scan, but then they just get stuck in a position where they can't get out. With us taking such a wide range of trades here, we're not just buying individual calls and puts, we're trading some vertical spreads as well. That liquidity makes a huge difference. So don't just scour the markets for that next hot name or name that you think is going to become popular. Go to where the action is at on a regular basis. All right, now, if I go to, let's just go load up Google here. What I'm ideally looking for is, what I'm trying to avoid are those names where you might look at the options and you see good liquidity on one strike, where you've got thousands of contracts of open interest and volume on one strike. And then you look at other strikes and there might be 5 or 10 contracts. If you start to see massive liquidity on 1 or 2 strikes, in all likelihood, it was probably just a big institutional trade. It doesn't mean that there's good, consistent liquidity. It just happens to be a big trade was put on a given session. What I want to see is good numbers across the board. And you can see on Google, we've got just that. And because I'm using a mix of weekly and monthly options, when I come in and take a look at the markets that I'm trading, I'll open up the weeklies here, and then I'll take a look at the monthlies down below. I want to see those good numbers in a wide range of expiration cycles. Most products that we look at have weekly options these days, but the weekly options are not always ultra liquid. Make sure you're seeing good liquidity in the weekly options as well. So let me go ahead and pull up my list. I have the top 10 markets that I like to look at with our active trader mode. This is not, when I take a look at the active trader mode, I'm not looking for dozens of markets. I'm not looking for a watch list of 100 products. I'm looking for a very small list, names that I know that I can go to and look at on a daily basis. For me to go through these 10 charts, I think you would all agree. To take a look at 10 charts, that's doable. It's doable multiple times a day without having to sit down for an hour each time. I can literally do this in just a few minutes. So you'll see we've got a lot of tech stocks here. Remember, we're going where the action's at. Apple, Amazon, Tesla, Netflix, Google, Microsoft. Household names that we know are going to be active on a daily, on a weekly basis. We have IWM, SPY, and QQQ, the major index ETFs. IWM is the Russell 2000 ETF, SPY is the S&P 500 ETF, and QQQ is the NASDAQ ETF. We know that those are very active, very liquid. Gives me some instant diversification right there. And then JP Morgan, throwing in a financial name to the list as well. If all I did is look at these 10 names, not necessarily going to guarantee that I'll have trade new setups every day, but over time, you're definitely going to be active on a weekly basis. I am not concerned with being active every day just for the sake of being active. I want to be in the best setups, the highest quality setups. If I take a look at these stocks, we took a look at a couple of them here just a moment ago. Here's QQQ. Let's go ahead and take a look at, QQQ. Is there a setup here on the right side of the chart? No. I don't need to sit there and try to justify whether there's a setup there or not. I can see very clearly that there's no setup there. Not going to force it. I'm going to wait for the best setup. IWM just closed out of a winning trade this morning. We do have a new long setting up. I can see my blue dots above. There's a long entry at 197.34, but we haven't hit that level yet. So until that level is hit, there's nothing for me to do. I'm not going to force the setup. It's great that we just close out of a winning trade. I love that. It's always nice to close out of the winner. It's very natural to say, hey, that's a great feeling. Let's get right back into a trade. But if there's not a setup there, if we have not hit an entry point, I'm not going to force it. We're going to wait for the next setup on IWM. If we take a look at SPY, just closed out of a winning short trade yesterday. Great situation. Close out of that nice winning trade, but we haven't had a setup since. We're just in a holding pattern, which is fine with all the news out there with the next 24 hours. I don't mind that at all. We're just going to wait for the next fresh setup. Netflix. Okay, the system is coming off of a winning long trade. That was closed out of Monday morning. We just got into another setup here this morning. This is a long setup that you can see came up and clipped the entry point on the long side. That's my blue dot. Target up at 444.86. The stop is down at 425.42. However, we do have a new short trade setting up. This one we may have to flip around to the bearish side this afternoon. You can see my magenta colored dot setting up. That gives me an entry at 435.59. If that level hits, I'm going to flip around to the bearish side. Right now, we're in a bullish trade. If we flip around, it's going to be a small loss, very small loss. We're getting out right around the entry of the long setup, and we'll flip around to the bearish side to see if we can get a move to the downside going into the end of the week. The great part about this is this roadmap is there for me every day. It's either a setup or it's not. The criteria is very crystal clear. If I see blue dots on my chart, it's a bullish long setup. If I see my magenta colored dots on the chart, that's a bearish setup on the downside. Entry point, targets, stops, they're all outlined for me in real time. So now what we've done is we've showed you how to just take the long puts on Google. Really nice trade, 200% return on that trade from earlier this week. We have a ROKU trade with a swing approach with a credit spread that's already in a profit. Haven't hit a target level yet. It could do anything at this point. We just don't know. But we're into a small profit already. One was a weekly option. One is a monthly option. So now we're adding in those layers of diversification. And then now we've given you an exact list of markets to look at on a daily basis. So now you've got a full trading approach right at your fingertips, right? The indicators, the exact entries, the exact exits, the exact markets to look at. We're giving you the ability to simplify your trading approach, right? And to stack the deck in your favor over time. We're going to have winners and losers. I just showed you a series of charts where you're going to see winners and losses on those charts. But over time, we know that those numbers are going to be in our favor. And that's the key to focus on. Going forward, guys, with 100% certainty, we are going to have active markets going forward. Bottom line, markets are going to change over time. You want to have the ability to change along with those conditions. So the RWT, by far my favorite approach to the markets. We'd love to have you join us. We will be having a webinar next week where we're going to go into detail how you can access the complete indicator set, the trade plans, the training, how we identify the options. We're going to go into all of that detail. You will be seeing those details from us very shortly. So we'd love to have you join us for those webinars here next week. So I'll continue to track the ROKU trade. If you have any questions on that, feel free to post a comment here in YouTube. You can always email me directly, mike@netpicks.com. I'd love to help out with any questions you might have. Guys, it's our goal to make sure you are successful with your trading going forward. So I'm going to wrap this video up here. I'll be back with you guys again tomorrow with our next video.